morning, good afternoon, good evening. You are watching the Paris Fintech Forum Communities video interview series. I'm Elliott Gotkine, and today I'm joined by the founder and CEO of Augmentum, Tim Levene. Welcome.
Good morning, good afternoon, good evening, Elliott. Great to be here.
Lovely. Well, look, great to have you here. And look, before we get cracking, first of all, we're going to learn a little bit more about Augmentum. So, Tim, we've had a number of fintech investors and VCs join us here, but I think you're probably the only one that's publicly traded. Is that your main differentiator? How else would you, as a VC firm, differ from private VC firms?
Well, I think if you go back in time and you look at the history of venture, most venture funds tended to be generalist investors. And I guess when we started Augmentum 1.0 back in 2010, the challenge for us was one differentiation. And I think being an entrepreneur, having that kind of entrepreneurial DNA was somewhat differentiated 12 years ago. Having that fintech specialism added another layer. And then I think back in 2018, when we listed Augmentum on the main market in London, the opportunity to open up access to retail investors for the first time to be able to invest in diversified fintech, private fintech in particular, was something that really stood us out. We certainly are and were the first listed fintech in Europe. There are one or two others that have popped up around the globe, but we tend to be a little bit unusual at this point. But that permanent capital certainly gives that element of differentiation. And I think in a market where short-term exits aren't always guaranteed, and I think we're living through an unpredictable market at the moment, having the ability to be patient when you need to be patient is pretty compelling for founders as well.
As you say, Tim, these are unpredictable times right now, and I suppose for other VCs that aren't publicly traded, unless there are down rounds or well-publicized write-downs, most of them can almost pretend that their investments are doing better than they are because they're not publicly traded. But obviously you don't have that luxury. So I imagine 2022 hasn't been a whole lot of fun for you.
Well, I think you've got to separate the market backdrop and the wider economic environment to what's happening in the venture market. There's no question that 2021 was an outlier year. Valuations went well ahead of where they had been at any kind of historical past, and as such there was, in our view, quite a lot of inflated pricing. I think one of the underlying characteristics of Augmentum to date has been not getting too swept up in the euphoria, backing businesses that have strong fundamentals. And yet, listed private equity, listed venture across Europe and the US has suffered, and most, if not all, are trading at a discount to their net asset value. But fundamentally, I think it's you've got to get under the hood and look at those valuation approaches. And I think something that we've always felt we've done quite effectively is to mark our portfolio quite prudently. And when we look back into the heights of late 20 and the middle of 21, where I think the market was at its peak, what we hadn't done in our underlying portfolio was to mark our private portfolio at those levels. So I think we felt the market was hot. I think what's interesting now is we are living in a world where there's still a significant amount of dry powder, both in the private equity and venture space. And I think one of the challenges that the market is having is you have the founders that are still in some ways, not all, looking at 2021 and looking somewhat nostalgically at valuations, and you have investors back in 22 and the market we find ourselves in now, and I think looking at more historical multiples. And I think the bid and offer has not yet met in some cases, but where fintechs and tech companies need capital, then deals are being struck at more realistic pricing. So I think we're going to see 2022, what remains of it, and 23, more likely in the first half of next year, a clearer normalization of what's happening in the market. But I think from an Augmentum point of view, we remain well capitalized with more capital than we've had at any previous point in history. The portfolio is largely well funded, and I think that puts us in a good position to be able to capitalize on the market on what's ahead, both in 23 and beyond.
And if I'm not mistaken, Tim, I think you've got about £300 million under management, and about a fifth of that is in cash. This must be a great time to go bargain hunting, but I guess you're waiting for those valuations to kind of come down to what you're prepared to pay. Is that a fair assessment?
Yeah, I think it's a good question. I never like the word kind of bargain hunting, because I think we've got to go back and look at 21 and say, that was an anomaly. Let's go back over the last 10, 20 years and look at how high growth private tech businesses were valued at different stages of their journey. And I think we will revert to the mean in 23. What I don't think we're going to have is what we saw in 2000. Certainly, when my time as an entrepreneur, when we were building Fluffer and Betfair, when the market fell away in 2000, really the capital evaporated overnight. What we hadn't built in Europe was a strong ecosystem in venture. And I think we really do have that now. What the European ecosystem has done, in particular over the past 10 years, is build real depth and real bench strength. And I think, there is a significant amount of capital looking to be deployed, albeit not at the same levels as we saw in 20 and 21. And of course, there are a number of investors that entered the market for the first time last year and perhaps got their fingers burnt, and we might not see them again. But I don't necessarily think that's a bad thing. We want long-term, smart, sticky money in this market.
Okay, so look, we've heard about Augmentum. Let's now get to know Tim a little bit better. So, Tim, I think millions of people around the world saw all the pomp surrounding the Queen's funeral, but there's another position that conveys kind of quasi-royal treatment, and that is Lord Mayor of London, a position your father held. For the uninitiated, what does that entail, and what was it like being the son of the Lord Mayor of London? I understand your father was also the chairman of Lloyd's of London as well.
So, yeah, it was a long time ago, back in 1998. And I think the City of London is the oldest democratic institution in the world, so over 800 years of democracy. It's divided into 25 small wards. Each ward has an elected head, which is known as the alderman. And each year, one of those aldermen becomes the Lord Mayor of London. It's traditionally an annual role, albeit during COVID, we had our first Lord Mayor that served 2 terms since I think it was 1200. So there is a lot of tradition and history. And I think until you go through it, it's a somewhat surreal experience in terms of the Lord Mayor show, which is typically a November date on a Saturday, and that is when hundreds of thousands of people watch, the Lord Mayor be installed. So it's I think most have done it. So interestingly, in the last few years, I've become personally more involved in public service in the city. I was an elected councillor, and in the last few months actually became an alderman myself in the City of London. So perhaps one day, not all aldermen become Lord Mayor, but in order to be Lord Mayor, you do need to be an alderman. So I've just started that journey, and it's something which I think beyond the tradition and the ceremonial piece, the role of the Lord Mayor of London and the Alderman of London is to promote the City of London as a global financial centre. So it's a significant ambassadorial role. It's one in which the Lord Mayor spends about a third of his year going around the world promoting the City of London and the underlying industries as well. So although once in a while they like to get dressed up in robes and funny clothes, fundamentally the role is about ensuring that the City of London is promoted on a global scale across the UK as well.
Right, I see some synergies there between gilded carriages and fintech, perhaps. But you also, interestingly, you studied Russian and lived in Moscow for a time. At the risk of getting political, how do you personally feel about what's going on right now? Did you kind of feel more invested, more involved, more kind of? I assume you still have friends and people kind of over there.
Yeah, it's a great tragedy for Russia, having seen the amount of progress over the past 30 years. I lived there in the early 90s, in 1993, and I lived and worked there for a period of time. And I saw firsthand the dramatic acceleration in transition from historical communist history to a capitalist one. And obviously it was one that moved too quickly, which really kind of catalyzed a lot of the issues that we find ourselves in right now. And, I think for me, having met some fantastic people, incredibly interesting, part of the world. Back in the early 90s, I was traveling to parts of Russia that hadn't been seen by Westerners in 30, 40, 50 years. These were historically scientific cities, nuclear cities, and so they were closed off. So I met some incredible people, extraordinary warmth, great intellect. And so for me personally, as somebody that's been a student of the language and history and politics, it's a real tragedy to see what's going on there at the moment, and something which I'd love to think can be resolved. But yeah, doesn't look like it's going to be resolved anytime soon.
Okay. So look, Tim, a key part of this interview is to get your take on the future of finance. But first, we're going to take a very quick break, after which we're going to continue our conversation with Augmentum founder and CEO, Tim Levene. Welcome back, and don't forget, if you're not already a full member of our community, everything you need to join can be found at www.parisfintechforum.com. Okay, Tim, let's now talk about the future of finance. We touched on this just before when we were talking about Augmentum itself, but what do you make of the fundraising environment right now and the speed with which it changed? Did it come as a shock? Or, I mean, you said you were kind of quite conservative all the way along, or were you that you saw things were getting a little bit frothy? Were you expecting things to kind of go down the way that they did and with the speed that they did?
So you never can quite be prepared for shocks to the market, but I think if you'd been tracking the listed markets and looking at the forward revenue multiples of the growth tech companies and listed fintech companies, and we were seeing an average forward multiple in the 20s, which was pretty unprecedented. If you look at the global listed SaaS index, those high quality growth businesses growing at about 30-35% a year, the historic average is a forward revenue multiple of between 6 and 8 times. And so when you see a market really spike to the level that it did, then it shouldn't come as any surprise that that starts to fall away. As I said earlier, I think what's interesting in the market now is we have real bench strength. So yes, the market has fallen away, unsurprisingly. I think the first half of 2022 was pretty strong, but I think you had a real lag from the end of 21. I think a lot of investments that were made in Q4 that took a little bit of time to get announced or took a bit of time to close rolled into 22. And I think you'll really start to see this market, its true kind of form in the final half of this year, and in particular in Q4, which I do think will be quiet. It's not because that there aren't great companies being built, not that there aren't great companies that are continuing to scale, but I think a lot of investors are sitting on their hands to a certain extent to see, when the market, I don't want to say will hit the bottom, but certainly when sentiment starts to bottom out. And I think you will see a more active market in the first half of next year. I think a lot of fintechs in particular, if they don't have to raise, then they're not going to raise in the final half of 2021, 22 even. And so I think you will see a busy start to 23. But as we talked about earlier, you will start to see kind of more moderated valuations when this elusive bid and offer will finally be met. But I think the important thing in our sector is to separate valuation acceleration and the structural opportunity ahead of us in fintech, which still remains extraordinarily compelling. I think you only need to look at the amount of investment that the incumbents, both in the banking sectors and the insurance sectors, are making in digital transformation. Many of them continuing to struggle. I think we estimate that about $500 billion a year globally is being invested in digital transformation, and of that, the vast majority of that capital doesn't get deployed particularly effective. So I think you're going to see a very active M&A market over the next 3 to 4 years, and that bodes very well for those businesses that have real strategic value in the financial services space.
And is the lesson from, I guess, the boom in 21 and perhaps, I don't know if we can call it a bust, but what's been happening in 2022, that founders should always raise as much money as possible whenever they can? Is it that you should always be capital efficient from the start so that you don't need so much capital, or is it that a combination of both is the best advice for founders?
Yeah, I don't think there's a one-size-fits-all strategy. I think the danger of raising as much capital as you can put you in a difficult position if you raise too much money at a higher price. And I think what we were seeing in 2021 were companies that were looking to raise 50, 100 million, and all of a sudden a fire hose of capital came their way. And all of a sudden they were raising 300-400 million at a very inflated valuation. Now the challenge for the business then is, can they grow into the type of company that the investors that have come in want them to be in order to deliver that return? So if you felt that you were a business that could grow to 3 to 4 billion and all of a sudden you hit that unexpectedly 3-4 years early, that does shift your strategy. So yes, in good times you should raise money. You should always have kind of strong fundamentals. There has to be a plausible path to profitability. Ultimately, that is how the market is going to value you if growth slows down, and it has to be sustainable growth. So I think we talked to a lot of founders who turned away a lot of capital over the past 12 to 18 months because they felt that they couldn't deploy that capital effectively. And I think we'll see a lot of examples of businesses that were burning capital at an unsustainable rate and have really kind of gone back to basics now. And I think that's where we are in the market. And so although I think there have been some high profile businesses that have come under a fair amount of fire in the press over the last kind of 6 to 12 months of burning inordinate amounts of capital. I think there are a lot of very capable fintech founders out there that have been pretty prudent, have preserved their cash, and are in a good position to capitalize. And I think those with strong balance sheets and strong growth trajectory will see this as a great moment of opportunity, M&A for startups.
Right, and so which sectors would you say offer the most resilience in the fintech space, and perhaps the best prospects right now, that perhaps there are opportunities that were unavailable to them when valuations were sky high in 21?
Yeah, I wouldn't necessarily isolate it to one particular subsector in fintech. Clearly, some have come off. So, of course, the world of crypto has come off significantly in the past 12 months. But then there were sectors even over the past 2-3 years in financial services and fintech that were a bit out of fashion. And I think lending has been a sector that's out of fashion. And those, I would say longer term digital lenders that have been in the market, building strong capabilities, strong lending models, are really well positioned if they have a scalable and affordable debt line. And I think you'll start to see some of those businesses come to the fore over the next 18 to 24 months. And I think there will be consolidation in the space. And there'll be consolidation across a number of sectors where you have, a number of fintechs that haven't hit that kind of elusive scale number, and they can have economies of scale by combining cost bases and really start to move to profitability far quicker. And again, I think you'll see some pragmatic conversations happen more and more in 2023 and beyond, when the cash starts to run out and when investors start to look a little bit harder and say, we like what you're building, we'd like it even more if you could combine with X and Y. And for us, we see a number of opportunities along those lines as well.
Okay, Tim, just briefly, if you can, Augmentum is based in London. I know you're not physically there right now as we're speaking, but of course, London, one of the world's global financial centres, leading player in fintech. Obviously, 2022 has been a tough one for the UK with crises in energy, cost of living, the economy, and of course, politics. What's the mood? What's the mood there right now in the fintech community? How would you sum it up?
Well, I think without sounding flippant, the fintech community in London feels a little bit immune to the political and economic chaos around it. A lot of UK London-based fintechs are building global pan-European businesses out of London. And why is that? It's because the UK fintech ecosystem has been built over the last 20 years, where you've had successive governments, and we can be critical for a lot of policies, but I think one consistent policy that successive governments have had is to support the UK fintech ecosystem alongside a regulator that's looking for innovation and disruption, alongside the central bank that equally recognizes the importance of change in financial services. So that, alongside with the talent base and the pool of capital that we have in London in particular, puts it in a very strong position to continue to thrive, despite the fact that Brexit is a challenge and we have political uncertainty and a cost of living crisis. So, I think we remain bullish and optimistic about UK fintech, but at the same time, for us as a fund, we're very much focused across Europe and Israel. So we're backing businesses. In fact, if I think about the last 6 or 7 businesses we backed, 6 of the 7 have been outside of the UK, a combination of investing in Germany, Sweden, Finland, Israel, France, amongst others.
All right, lovely. So look, it's time now for our round of rapid fire questions. You ready, Tim?
I'll do my best.
Okay, so I've got 90 seconds on my my phone's countdown clock. We'll get through as many as we can in that time. Just one-word answers is all I'm after. So away we go. Most successful fintechs, or a lot, were kind of well-funded, but we're losing money hand over fist. Is that something that is no longer the case? Is that something that is kind of like now in the past?
Yeah.
Okay. What fintech segment has the biggest potential over the next 5 years?
Ooh, that's hard to put into one word. Let's say cyber-related propositions.
What's the biggest pain point in your everyday financial life you'd like to see resolved?
Availability of long-term capital.
Do you think we're at the beginning, middle, or end of the fintech wave?
We are at the end of the beginning.
Do you have a metaverse strategy?
No.
Have EU and US regulations kept pace with all the new possibilities and behaviours we're seeing in the financial industry?
Not at all.
How would you describe NFTs, non-fungible tokens? A scam, B, an interesting concept, or C, part of the future that we really don't want to miss out on?
An interesting concept early in development.
Have you ever personally invested in crypto?
I have, yes.
Are physical points of sales part of the future of finance?
Yes.
From a scale of 1 to 10, how likely are the following to happen in the next 10 years? That one of the neobanks will be as profitable as a top-tier legacy bank?
8.
That CBDCs become... Oh, I'll just start it till I finish. That CBDCs, central bank digital currencies, will become a mainstream reality in the US or EU?
In the next 10 years, I'd say less than 3.
Oh, wow. Interesting. Okay. Well, I'm afraid that's all for our round of rapid fire questions and all the time that we have for our conversation. So I really just want to thank you, Tim Levene, founder and CEO of Augmentum, for taking the time to speak with me today. Thank you so much.
Thank you, Elliott. It's been a pleasure.
And for everyone watching, we will be back again next week with another big name from the world of finance and technology. We do hope you'll be able to join us again then. In the meantime, don't forget to subscribe to the Paris Fintech Forum YouTube channel and to follow us on Twitter @Paris Fin Forum. That's all for now. See you next time. Bye-bye.